So here we go. Today is Fed Day, and I don't think that Powell is happy that the markets are making new highs for the year. So, will he say something today that is tanking the markets? And how does this affect our open positions? Also, this morning, the PPI report has been released, and a little bit surprised there. So, we'll take a look at this. So, welcome to Coffee with Markus and Morgan. Today's Wednesday, December 13th, Fed Day. And in this show, we're going to talk to you about what's happening in the markets and how we are trading it. And Mark, it is up, up, and away for the markets. I mean, geez, as I said, I don't think that Powell is happy about that.
It could be a bit of a challenge. Now, the Fed technically has a dual mandate to focus on maximum employment and price stability, and what the market is doing isn't necessarily something that the Fed takes into consideration. But uh, a strong market, good sign for the economy.
It is, but this is where I think that Powell might also be concerned that inflation might be heating up again. I mean, if everybody is just happy and content, and I mean, this is what we might see here that he says, well, we shouldn't see this. And that's where it goes back to, okay, what's happening here with inflation? Yesterday we had the CPI being released today, followed by the PPI.
Yep, and you look at those numbers there. Core PPI unchanged and coming in lower than expected. PPI also unchanged. So core PPI, which excludes food and energy, which tends to be a little more volatile, flat, and that is a positive here. Year over year basis, the index was up just 0.9%, excluding food and energy and trade. Um, yeah,
You
it's
see, I think this is very interesting because, yes, of course, the consumer price index, that is probably giving us a better idea about inflation. However, we also know that the Fed and Powell likes to look at the PCE price index. And this is where we have several components that are in the PPI that are in the PCE. So this is why I think it would make sense to pay closer attention to the PPI. I think that this is what Powell might do. So do you think he will reference these quite good numbers this afternoon?
I think so, but I also believe that nothing has really changed here for Powell's stance, right? I don't think he's going to give the market any nugget to grab hold of that would be positive. I think he's going to say the Fed will be data dependent. Inflation remains sticky, and just the same thing. I don't think he's going to be dovish here. He's going to still be a little bit hawkish, and I think the Fed will keep rates higher longer, although I do believe that they're done, and I don't think he's going to really shed light on when they're going to cut.
Yeah, I mean, that's the point. So I think that, as you said, he'll probably sound more hawkish, so just being very stern, but also kind of like a broken record. And this is what
Sure.
we see right now in the markets. I mean, if you look at a 5-minute chart of the S&P, yes, we are drifting higher, but if you look at the VIX, the fear gauge, I mean, we are trading at a 4-year low. Nobody is expecting that Powell is saying anything that could be way different from what we already know. And that's what you said. He'll say we're moving in the right direction, but we still have ways to go. We are committed to a 2% target. And yes, the interest rates will probably stay higher for longer. I mean, this will be the
And that
core
was
message.
and that was my attempt at a sounding like a broken record.
Yeah. Okay. Well, this is why I'm repeating it so that it really sounds like a broken record. Because, I mean, we also have, so we only are 3 hours away from the next Fed meeting. And so these probabilities will change this afternoon. I'm very, very convinced that they will. But right now, the Fed is not expected to do anything, keeping interest rates the same. But they're also releasing the so called dot plot, which
Yep.
basically means that they are saying what they think they're going to do in 2024. If they keep it the same, if they're expecting one more hike, if they're expecting to lower interest rates? If so, how many times? So they won't probably commit to when exactly, but the dot plot typically tells us, okay, how many more hikes, and if there are any planned lowerings, I don't know, decreases.
You know, but this will be interesting, Marcus, because back in September, the dot plot showed that Fed members believed we were going to see another hike or two, and that didn't happen, right? So it'll be interesting to see what the Fed thinks now if another hike is on the or is on the table potentially, or if everybody's thinking about cuts and when those cuts will take place. We see what Fed funds future shows as a possible cut, but that comparison to what Fed members believe, that could cause a little stir in the markets.
Yeah. So we'll see. Markets are definitely waiting, but I was just about to say nervously waiting, but they're not nervously waiting. They're just waiting. That's what it is.
Yeah, VIX closing at a 4-year low. Yes, I mean it's just no volatility, and yes, things can be a little slow going into the end of the year, but gosh, just nothing.
Yeah. All right. I mean, looking overall, we have been mentioning Bitcoin over the past few days, and Bitcoin a little bit all over the place. So now up again, approaching 42,000, but just hanging out there between 40,000 and 44,000. I mean, that's in the market, not a whole lot going on. In Bitcoin, 10% swings, what, within a couple of days?
At least that's how it's been recently. So interesting to see we're up 1.2% today. And with the markets a little bit higher as we await the Fed, interest rate yields are down.
Yeah. So, I mean, that's the other thing, right? And let's take a look at the 10-year yield. I think that Powell was quite happy when the markets were doing the job for the Fed, when interest rates were rising, going to 5. And I think that he would be much happier if they would have stayed up here between 4.75 and 5. I don't think that he likes the idea that interest rates are pulling back that much right now.
Exactly. When those yields are higher, that it was estimated that it would be the equivalent of a quarter point hike in the Fed, well, with the Fed's rate decision there. And on this pullback, not necessarily a good thing, maybe not a bad thing, but going back to the markets being at highs and whether or not the Fed cares, I think that the fact is that when we are talking about a soft landing and a strong, resilient economy, the Fed can keep rates higher longer without crushing the economy, right?
Yeah. So what I found very interesting, if we look at the difference here between the 10-year and 2-year, we know that usually it should be above zero, so that the 10-year has actually a higher interest rate than the 2-year. Right now it is inverted, and this is where people say, well, when this is inverted, it means that we could point to a recession. Over the past few weeks, I'm on a weekly chart here. So over the past few weeks, we have been pulling back from the zero line again. So that's kind of contradicting what everybody is expecting right now, this Goldilocks scenario where we will not have a recession. So that's not what this difference here between the 10-year and 2-year is showing us, because since late October, it has pulled back again from the zero line.
And that is interesting, but are we in a different type of environment? Because yes, the yield curve inversion in the past has been a signal or sign of a recession, but I mean, gosh, we've been talking about a recession for the last 2 years now, and we're 3% away from record highs, and
Yeah.
we're trading at highs of the year, levels that we haven't seen since January of 2022.
Yeah. So, yeah, this afternoon will definitely be interesting. And we know that usually there's three reactions to it. The first reaction will be basically right when the. Oh, I wanted to go to the economic calendar. Sorry about this. So, we'll be right then when the Fed issue their statement, which will be at 1 o'clock Central Time, 2 o'clock Eastern Time. Then there will be a second reaction during Powell's press conference. And then we will see a third reaction tomorrow after everybody is digesting what's happening. Because the press conference usually goes for anywhere between 35 and 40 minutes, depending on how many questions there are. And that's getting very close to the close of the markets today. So this is where usually there's a third reaction tomorrow.
So, Marcus, do you think much ado about nothing, or do you think that this is going to finally be a reason for the markets to move and for the VIX
I
to
think it's a reason
spike?
for the markets to move. And I really, 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 I'm very surprised by the VIX, the fear index, being at a 4-year low. Usually this doesn't last long, and when fear is coming back in the market, it means that the markets are moving lower. So going back to where it is, there it is, the stake zone. I know that we are far away from the stake zone. Right now, I honestly don't think that we will pull back all the way into the stake zone, but I do believe that we might be hanging out between 4550 and 4600. That we see a pullback here to below 4600.
Yeah, I wouldn't mind a pullback and kind of a shakeout there, and then a bit of a Santa Claus rally into the end of the year.
Yeah. All right. We have a few stocks that we should talk about. I mean, yesterday, Oracle, after reporting earnings, already were sliding down. Today, bouncing back a little bit, at first moving lower, but Oracle yesterday dropping 12%. Today, adding another 2%. We talked about it as a possible wheel trade, and we both said, nah, we'd rather pass on this one.
Yeah, hard to really see strong support with this one. I know you had some concerns about maybe the business model or what's in store in the future for Oracle, but for me, it was really more about support and such a big drop.
Yeah. All right, and then today we have Pfizer. Pfizer,
Yeah.
it's a stock that we have been trading it, but they today down 8.5%, which for Pfizer is a big drop.
You know, this really is, but look at this chart. We have traded it in the past, but this is one of the reasons why I think it's okay to have some of your favorite wheel stocks, but to not be married to a position or a stock. And one of the reasons why I don't like sharing a watch list, right? Because that could change monthly, weekly, even daily, depending on what's going on. Pfizer's been in a downtrend since well, really for the last year. So this one not looking too hot, getting worse today, touching a 10-year low on weaker than expected profit and revenue forecasts.
Oh, oh. It seems that somebody was trying to FaceTime me here for a moment. All right. Now that's over. Okay. But yeah. And this, again, just weaker forecast, no earnings or anything like this. So yeah, surprise, surprise. What else going on? Well, kind of that's it. Let's go jump over to our positions and take a look at those. Because first up, CSIQ, and I mean, we talked about it this morning in detail with our mastermind members. Still very interested in flying a rescue mission, but since we know that CSIQ is interest rates sensitive, we want to wait until the Fed meeting this afternoon and possibly tomorrow flying a rescue mission. Down a little bit today, and I believe this is there is some nervousness here. Okay, what will Powell say? How long will interest rates stay higher for longer?
I agree, and I like this 19 to 21 zone. I would be interested in maybe adding to it at 20. We actually ran some numbers with our mastermind group this morning in our virtual boardroom and looked at the comparison. What happens if we added 20 versus 21, and what happens if we do a 1/3 rescue versus a half? And I definitely like bringing down the cost basis of the position to that range that we saw back in September before that second push lower on concerns in the solar industry. So if I could bring my cost basis down to that range to sell calls on a pop there, whether it's a couple weeks or a couple months, doesn't matter. Getting down to that level, I think, is going to be nice. So we're watching this one, but I
Yeah.
agree. After the Fed would be what I'm waiting for.
So we might make a move tomorrow. I don't think that we'll make a move this afternoon, but probably tomorrow. All right. So then NEE. I mean, just plugging along, but come on, buddy. I mean, just well, I need to. There we go. All right.
Um,
We need to
uh,
pop above 62. That's also something that
Crank it
could
up.
happen this afternoon. Now, well, I mean, or maybe not this afternoon, but next week.
Let's go.
All right, Oxy, super interesting here. So Oxy, I got assigned at 57. Um, Sold calls in the beginning of the week. Let's just go back to 57. Oh no, it's actually right up here. Let's see. There we go. Right. So I sold calls against the 58 level, and yesterday with the drop lower, I was able to close it. Right now, I'm looking to sell calls at the 57 level again and hoping to double dip here, being able to double dip. So that's where we looked at it this morning. There wasn't quite the premium that we were looking for at the 57. So we need at least 14 cents. Oh, okay, it's 18 by 20. That's not bad at all. So I might take this for 20 cents.
Okay. Yeah, you had the opportunity to buy back your calls at 80%, and I was close yesterday on Exxon, but wasn't able to get there. So I like this double dip, so to speak.
Yeah. So let's take a look at XOM since you brought it up. So XOM, yeah, I mean, moving lower yesterday, moving back up higher today, and you sold the 100 calls and weren't able to close them yesterday because Exxon didn't move low enough for you to be able to do this. But I mean, we'll see what happens over the next couple of days. Seems that these calls might expire worthless, and that we have the opportunity to sell calls again next week.
Yeah, I it came within a penny. I had a working order and just let it work. I wasn't micromanaging it, but came within a penny of that 80%. But still in this one, and right now those calls are at 76% max profit.
All right. PNC up 0.1% today, just hanging out there at the 141.50 level, which is a little bit surprising for me right here where my cost basis is. I sold the 143 calls. Let's see if they expire this week. If so, I'll probably be a little bit more aggressive next week so that I get called away on this one, free up a position, or just be in cash over the holidays here. So I'm okay not trading necessarily into the holidays and between Christmas and New Year's. That's usually where I'm spending time with the family, with the kids, and not really being glued to the markets here.
Yeah, you've played this one well, Marcus, and I like those 143s.
We'll see, Mark. I mean, you're out of this, and there's always the risk that this can move lower again, right? I mean, there's no guarantee that this keeps moving higher. So this is why I said this week I like the 143. Next week I'll be a little bit more aggressive and probably just sell the 142 and just try to get out of this one, especially since we see some resistance right here at around 150, 150.
Hey, I'm hanging in there for you.
Yeah,
Hanging in there in spirit, although no longer in the trade.
yeah. UPS, I mean, UPS is just staying in this range that we had established earlier. And right now it seems that we are going back into this range. Well, this is a horrible, horrible box. Let's get rid of this and let's try this again. So seems that we are pulling back into this range that is established somewhere between, I want to say, 150. Jeez, oh Pete. 150 and 157.50. I mean, that is my cost basis. I was hoping that we can break out of this one and that I can sell calls above my cost basis. I'm still waiting for this one, but I might actually next week look at selling the 157.50 again. Just hoping to get called away here and not having to worry about the positions between the holidays.
Super, super tempting. We talked about it before. I'm in at 165. 162-ish is my break even. But yeah, Marcus, I mean, if you could sell some calls, get some nice premium and, get called away, even if it does move a little bit higher, sometimes freeing up that buying power and not being, fixated on the market over the holidays is a win.
Yeah. All right. I think that between now and 2 o'clock Eastern time, not a whole lot will happen. We see that the S&P 500 is stalling right there, and I think that's about it. And then we will see the reaction first at 2 o'clock, then again at 2:30 when Powell is grabbing the mic, and then tomorrow. So it will be an interesting afternoon. I think it will be interesting. I think it's a reason for the markets to move. And I think that there's
Let's
more pressure to the downside.
with the run up, I'm with you there, Marcus. And also, I'm a little bit biased here because I do have an open position I'd like to fill. And if there is a drop, it's a perfect opportunity to collect some premium on the put side with that volatility that we haven't seen recently.
Yeah. All right. Well, make sure that you tune in tomorrow to see how our positions are reacting to this. If you enjoyed today's video, give us a like. If you feel that others might benefit from it, feel free to share it. There's a share button right underneath the video. And if this is your first time here, consider subscribing to the channel, because this way you get notified whenever we go live again. And we'll be live again tomorrow, letting you know what the Fed decided to do, the dot plot, what Powell is saying and has said, and how the markets are reacting to this, and especially how this affects our positions in our portfolio. So have a great rest of your day, and we'll see you again tomorrow.
Happy trading, everybody.